Hello, everyone. This is JJ from Keyword Crypto. Thanks for tuning in. Today we had Notsofast on the show. He's an altcoin miner, a crypto trader, a Twitter personality. He's been in the space for a while, so it's about time we had him on the show. While we do this show for fun, it does cost money. So if you listen often and you enjoy what we do, visit our Patreon page and make a contribution so we can keep doing it. Follow us on Twitter at Keyword Crypto, and as always, enjoy the show. All right, welcome everyone. Keyword Crypto. Today we've got Notsofast on the show. Notsofast, how are you doing?
I'm doing great. Thanks for inviting me on.
Yeah, so you're making it through these crazy quarantine times, all right?
It helps when you have jobs that make you sit at home in a room at Central Command and don't get out much in the first place. But I feel very fortunate compared to extremely many people. So I'm just trying to do the right thing, stay on top of the best information that I can, and be engaged to help out where it makes the most sense. And I think that's the most we can ask of anybody who's not finding themselves wanting for anything at a particular moment. How about you guys?
Doing okay. I mean,
Yeah.
my job is pretty much a stay-at-home job anyway, most of the time, working remotely. But I do feel as an independent contractor, I do feel for a lot of the people who, don't have any security in times like this. It's got to be rough.
Absolutely.
Yeah, and I mean, this is my new job. So
Your newest job? You mean podcasting?
That and day trading.
Yeah.
Podcasting and
Day
day
trading
trading.
Bitcoin.
So not so fast. I don't know if you got a chance to check out any of our episodes, but our show kind of from the beginning was about asking a bunch of questions about Bitcoin and crypto and just trying to find out what works and what doesn't works. We're not like we're crypto enthusiasts, but we started out kind of skeptical about how things work. And
That's really
at the
good.
same,
That's the right place to start, is from a place of
yeah,
skepticism. When your money system's about to be replaced and that's the
right.
proposition, then you got to start from a place of, well, how is that a
Exactly.
net win for me?
Yeah.
So while most of our episodes are kind of about asking tough questions, talking about the technology, talking about the philosophies and ideologies, we haven't really had too many people on to talk about trading and investing. I mean, a little bit of investing, yeah, but we can't deny that as people interested in crypto, we're also like totally interested in trading and totally interested in investing. So when I discovered you, it was I found crypto in 2016, 2017, and my story is kind of similar to everyone else who was in the bull run in 2017. Getting excited, finding Twitter, finding all these personalities, and you were one of the first that I came across that was a trader on Twitter talking about altcoins and not just shilling things and not just shit posting all the time.
Well,
So
thank you.
yeah, so I am totally interested in talking about your approach to trading, why you do it, why do you just trade crypto or do you trade other assets as well?
I had a background doing a very specific style of trading. I was scalping the New York Stock Exchange from about 2003 to 2007. I had 4 really good years and then one bad year where I kind of got wrecked and had to quit. But when I got actually interested in crypto, it wasn't sort of directly a desire to get involved in the trading. Moreover, it was sort of to try and get involved in the capacity of a miner, because I thought it was really cool that you could print your own money using spare electricity. And it just so happened that I had a bit of flat rate electricity included in a rent contract for kind of my main
Nice.
meat space business. Yeah, not a ton, but just enough that I could run some computers and fuel my interest. And then as I got involved with that, I realized that the systems that had wrecked me out of the legacy markets, because I was scalping, so I was relying on my eyeballs to watch the ticker tape and watch the 1 minute charts and like the very short term charts and sort of see which way the wind was blowing and develop an intuition. And once the NYSE got its hybridized system, suddenly you got HFT or high frequency trading, which completely spammed the order book. Like no human brain can keep up with the amount of spam from increasing numbers of servers co-located to the NYSE, spamming them with orders as fast as they can churn them out per millisecond. So I noticed that crypto markets were a throwback to relatively easy to read. And you can also see that because they're pretty low volume, there's a lot of manipulation going on by players that are bigger than you, but possibly even not that big on certain markets. And that's what sort of altcoins presented to me, is that I found I was able to play around mining new coins, and then there would be a brand new emergent marketplace for these where I might even be a whale with an extra edge of information because I knew my cost of mining that didn't necessarily show up on the chart, and could sometimes sell out benevolently to the marketplaces it was developing for like profit multiples that shouldn't really be possible in a new system. So the bottom line is I got involved with mining, but I realized that an interesting edge of information asymmetry was being revealed to me in the sort of go-to-market process of these new coins, however valid their premises were or weren't.
That's awesome. So you're still mining today? That's one of the things that you do?
Yeah. Like with a caveat, like I was a hobbyist miner. I had a couple shelves with a couple computers and ASICs sitting on them, and I'm still at that point today. I just moved them out of the warehouse area. Just got a few rigs going in my own basement at the time, and they're not earning a net profit by any means. It's just sort of a barometer to check the industry, because after 2017, when the market capitalizations of kind of everything, the rising tide lifted all the boats. It became difficult to remain a profitable hobbyist miner while all these other miners were kind of jockeying to buy capitulated equipment and miners, and then finding places all over the world that would give, the cheapest or free electricity, kind of arbitraging natural resources or places that had too much electricity and could let it go for really, really cheaply. And so that squeezed a lot of hobbyist miners out of the game. But I still do it because it's habit at this point. And I still think that the things that I'm mining have a solid chance of experiencing another exponential upside like they did in 2017, or at least it's worth it for me to stay on the ride.
Do you think I think most people that get into crypto, whether it's trading or using crypto or whatever, most people think about should I mine? Should I try to mine? Should I go into it? Is this something that you would discourage from the average crypto user to get into? It seems like an expensive thing that isn't very profitable these days. But somebody's got to do it. Somebody's got to do it.
Right now, to be profitable, you have to take it on as a real business with a real capital undertaking. So you can't really work off a hobbyist edge like I started with. Like there wasn't an industry when I started, and now there's an industry. So the game has definitely changed. That being said, it's discouraged a lot of people to understand the mining process from a technical standpoint. And there's kind of a bleed through. Like you get the classic trader mindset saying like, I'll trade any chart. All I need is TA. I don't need to know what the underlying is or does. And when I was a scalper of the NYSE, I would trade a ticker for a week and like not know the name of the company that it was, unless, I happened to figure it out later. Mm-hmm. And there's a bit more of an overlap between TA and FA in crypto, and that overlap is mining. There's a lot of traders that don't recognize the difference between a token that was created all at once for free on the Ethereum blockchain or what have you, and then sold to people like an IPO and then dumped to oblivion, versus kind of an organically or semi-organically grown proof of work network that started out with a small number of miners and then grew to a larger number of miners and then grew to kind of a more going concern with a kind of existing low distributed cost basis that didn't all pay one person whose cost of production was nil. So there is a bit of validity. Well, there's a lot of validity in learning how mining works, but it's no longer a profitable on its own venture to just do it as a hobbyist and learn by doing. And that's a real shame to me, because that was one of the attractors for Bitcoin in the first place, is you could use computing equipment that you already had. So you didn't have to undertake any further capital cost to test this out. You just had to pay the OPEX, or the electricity, for your exploration into this. And now it's not quite as easy to do that. There are ways to do it. You can download the Honey Miner program, which I was sort of a backer and supporter of for a little while, and it still works. You can still use that program to mine under the hood altcoins on your CPU, just to get a feel for like, oh man, this is really making my laptop CPU go at like 99%, and it's getting really hot. This is crazy. And this is all it generated is like 100 satoshis for 24 hours. Like, okay, I understand something new about mining that I didn't realize before. It takes a lot of energy for just my laptop to do it. And that's a valuable realization in and of itself. But I would say it's been abstracted away. The knowledge of mining has been abstracted away from the general person, as that general person interested in crypto has expanded to a much larger group of people. And it's still important to know about. And there are good resources out there, but they're not put on a plate for you. There aren't really any articles or sets of writing that are devoted to telling you exactly how mining works and why, without getting involved and trying it for yourself. But because it's not directly profitable to do so, at least in the short term, it's much harder to get that education that I find is necessary to get a good fundamental grasp on why mining matters.
And not even not profitable, but at the same time, it's like physically detrimental to your computer. If you just want to be a hobbyist, you can destroy your computer after like a month of doing it.
Yeah, you can destroy your CPU after a month of doing it. And there's caveats to that too. Like most of the programs that mine on your CPU now, just to give you a taste of what it's like, will deliberately not use up your resources and even dynamically allocate them, so that if your computer's asleep, it still won't use 100%. It'll cluck along at like 70% or something, well within temperature tolerance. And if it finds your fans go on, then it'll turn itself off or clock itself down to like 10% of your resources. So it's really
Like
not as
like Honey Badger or whatever that one.
Yeah,
Honey Miner,
Honey Miner, I
Honey
believe
Miner.
auto adjusts, and that's the one I know. And I bet there's a dozen that out there that I don't know, and that's just the one that I know best from being involved with it. It's something though to there was some other, I think it was staking Tezos on Coinbase, that showed the number going up by tiny increments, but constantly ticking upwards, like the US debt clock that really grabbed people's attention and think, oh, I'm earning money, even though it's infinitesimally, it's constant. And it's neat to see that while you're mining and see it in Bitcoins and Satoshis and stuff. So if that's the type of thing that grabs you, I recommend just trying it and burning like 10 or 20 bucks of electricity on it, just to see what it's like and gain an appreciation for it. Because me saying it, you can be like, oh well, cost a ton of electricity to mine, but actually doing it gets you thinking like, well, there's people still doing it, so how are they doing it? And it gives you a bit better of an understanding.
Right.
Did you ever have the thought process about wasted energy that could potentially go towards something better? I know like Ethereum posted something. Some people with Ethereum today posted that they're trying to change the mining algorithms so it can be used towards trying to find cures for COVID-19, and so that computer process, the computer the whatever it is, the processing power. Sorry, the processing power can actually be used for something beneficial and useful versus just kind of like dumping it into the ethos.
Yeah, I get that. There's a bunch of weird arguments, and it's tough to unpack them to see sort of where the basis is. A lot of people will argue that the work or the energy burned to secure Bitcoin, even though it is, being thrown away, like the hashes of the people who didn't discover the nonce of the next block, are essentially wasted. Like they were losing lottery tickets to get torn up and thrown in the trash, except they cost a lot of energy. But that energy in aggregate gives a baseline to the protective value of the network. So even though it seems like it's wasteful, it underpins and essentially backs an entire economic money network and value transfer network and time stamping network and all the other values that you can ascribe to Bitcoin. And I'm just talking Bitcoin here. And in that way, it has value that's probably worth more than the energy burned, possibly and arguably worth more than even the economic externalities of the, how clean that energy was and damage it did to the environment when you compare it to other stuff. And one comparison I always like to use is the Bitcoin network in 2019 used approximately the same amount of energy, or like within an order of magnitude. Like it was maybe twice as much or 3 times as much as Christmas lights in the US in 2015 used. So all the
but isn't
environmental
that just
railing
kind of
against
an argument saying like, well, so and so's doing it, so I'm going to do it too?
Yeah, it is in a way. It is in a way. I agree with that. Like, oh, they're burning electricity, so why can't we burn electricity for what we want, right?
Yeah.
I mean, I feel like a lot of the Bitcoin arguments are kind of like teenager arguments like that. Well, so-and-so got a tattoo, so I want to get one too.
Yeah. I mean, arguing from the point of personal incentives does seem a little immature, but it isn't wrong, right? Like if you're hungry and you have no options, you're gonna steal bread. Like it's very like brutal incentive based, and it's not really altruistic, although I'm sure there are convoluted arguments that make it sound altruistic. But
yeah, in their
I agree
heads,
with
they
that.
try to
like
make it altruistic.
You could say, like, you could posit like, well, it would be more altruistic for Bitcoin to switch to the proof of work algorithm that underpins Curecoin, which literally is straight up a cryptocurrency whose proof of work can be used for folding at home, which is working straight up on COVID-19 research right now. And it's actually pumped a little bit in the marketplace. But, it's not super popular. And that's a whole underpinning of what makes Bitcoin is it's very hard to change fundamental aspects of it. So even if, by the time we achieve consensus to change Bitcoin's proof of work to something that helped out with COVID-19 research, we probably have a cure already through other means. And I think that's more of the magic of open source. Bitcoin's open source because there's an altcoin for that, as is a kind of funny semi-facetious saying, is just like, there's probably already been an
that
altcoin
Elizabeth
for that.
Warren kind of adopted. I have a plan for that.
Yeah,
there's an altcoin for that.
There's been an altcoin for that.
So speaking of altruism, I have a kind of a philosophical question, and maybe you can help me with it, because I like trading crypto. I love the charts. To me, it's like a game. I'm trying to win. But throughout my life, I've kind of despised traders, and there's nothing personal, but the idea that you're going to go and create a profession out of trying to take other people's money in a system that is designed for people to try to take each other's money and not really add much more to the world. Like, I don't like. I guess you're
Not
adding
only take people's money, but doing it by selling them something that you think is now worthless.
right. So here's the thing. It's like how do you and I felt this way, way back when I was in college, and I knew people training to be iBankers and basically going to do that on Wall Street.
Yeah.
Like this, to me, it was kind of like what it seemed like a low life thing to do, to just kind of go out there and try to make money in this way. And all you're adding is liquidity. But
Yeah.
as somebody who actually enjoys it now, I'm like I feel like I'm always trying to justify it. I'm trying to come up with a reason why I'm adding to the world. How do you deal with that? Like, what is it to you? You probably have a completely different perspective.
No,
Well,
I
first
see a
off,
lot of that.
Do you even care about that? Yeah, I mean, it's like, cause
do you care?
Me and JJ are kind of like, we're like snowflakes.
I mean, there are people that do stuff. There are people that do stuff that, first of all, everybody can justify what they do to earn a living to themselves, right? Like the Boeing or airline executives that bought back all their stock were doing it for their families or their legacy or whatever, like borrow to buy back their stock and giving absolutely no value to the value of their company. Like they have justified that to themselves, and they're vastly rich off of really no work other than paper pushing and management. So I feel like liquidity is not a bad thing for markets, because you are also, as a trader, paying the cost of risk and exposure in the very short term. And often that's met with leverage. And anytime a trader gets a leverage position liquidated, and like which means for, I'm sure most people know what that means, but it means that the amount of capital that you put up and the rest that you borrowed, your trade went against you enough that you were forced to close it at a loss of the entire amount that you put up in order to not owe the platform that granted you the loaned leverage that you used to trade it. So that, in a sense, is paying the market for your ability to try and seek profits on it. So to me, it kind of shakes out. Like, you provided liquidity, you provided the risk of being forced to give all the money you put up for that trade back to the market, and in return, you received the ability to make profits from your home office or from your bedroom or from your phone in a movie theater or whatever. So I'm pretty comfortable with that trade and with the morality of being involved. I feel that the risk is close enough to the reward, and the personal incentive, like, it's not like you're doing harm to someone beyond yourself. It's a little bit like the recreational drug user argument, like, if you become an addict, you're obviously causing an externality to the people you love and people around you. But if you're able to handle your stuff and just, enjoy something in moderation and recreationally, is there harm? Like, you could make a similar argument for, like, gun owners. If you keep a gun and it's safe and you use it for your own protection, and you go to the range because you're part of the culture and all that, and you're being responsible, you could make a strong, clear argument that you're a net benefit, and it's everybody else that's the asshole. Like, it's tricky to make those judgment calls.
I guess you could also say
really fast though.
Go ahead, Michael.
Is liquidity actually a good thing? Because you both just said it helps with liquidity, but is liquidity actually a good thing? Does liquidity actually help businesses grow? Or
that's a super good question.
Does it allow people to just kind of gamble and be like, "Ooh, let's gamble on this," versus, like you said, actually investing in a company and knowing the name of the company you're investing in?
Well, it makes the markets bigger. So it basically, by trading crypto, and this is the point that I was going to make, even if you're, not even looking at the the coins that you're trading, you're basically saying, I believe in this market because I'm trading it, so I'm adding liquidity so that more people can pay attention to it and whatever, trade it or something like that. You're supporting the
Yeah.
industry.
Yeah, like in aggregate, liquidity is what makes markets. I mean, if there are no buyers and no sellers, there's no agreement and there's no market. There's no trade that happens. There's no way for other people to take off a uh, spot valuation of something that can be looked at as accurate. So you could look at, like, let's say it was illegal and impossible to trade gold, for example, right? And all you could really do is be like, if you were a government or if you were a business with a valuation of like multi-billions or whatever, you were allowed to trade gold, and you can only trade at spot, like exchange gold bars through one system. In this fantasy, let's make it Peter Schiff's system because he's desperate for clout like that. So we,
There you go,
there would be
Peter.
very little liquidity, and it would be like the market for rare art. Like you don't know what something's worth until it goes up for auction, and you only know the last price that it sold at, and it didn't sell for like the last 20 years. So gold would be like that, and it wouldn't be useful as an indicator of market fear or greed. It wouldn't be useful as an indicator of whether people are fleeing to a safe haven. So what liquidity does is it gives much more accurate and fluid spot pricing information from that can be used as a data point for other types of analysis. So like we have index markets crashing and all this COVID-19 stuff coming to a point. And today we had, an interesting decorrelation where Bitcoin went up a whole bunch while everything else was bloody red. And those liquid markets and all the people participating in them, many of whom are traders, that tells us something. And if those traders didn't exist, that all that information would be much less accurate. We would have more large percentage up days and down days, and there would be a lot more noise and a lot less signal. So in aggregate, from the other data that good price information can generate for us in towards understanding our world, I think liquidity has like secondary value to observers. And so it's just another, you could argue against that obviously, but I think it's just another reason, like if you need
And I will in a
philosophical if you need philosophical valuation, that's one more benefit that liquidity in markets can provide.
I mean, I think that's a great argument for the stock market, where I would say the vast majority of money is being traded by people who have a semi solid understanding of the assets they're trading.
Mm-hmm.
And the reason why they're making certain calls or plays is based on futures of oil or futures of gold or lack of supply or demand or this or that, like, and they're
Right.
actively doing that stuff. That's not the case for crypto.
No, it's not.
I mean,
and this is
we
I
know
had a
for a
feeling you were
fact
going
that-
here. Yeah.
Yeah, I mean, because we know for a fact Bitcoin doesn't really work that well, and it's still the number one. There's like you said, there's an altcoin for everything, and none of these are being traded on actual FA or usage or. But then the other argument is that's kind of seeding the argument that crypto isn't money, that crypto is an asset to be traded, not to be used, and that kind of it comes to the begs the question: what is it really? Is this really a new form of money, and or is it really just a digital store of value, and it's just kind of
is it just a
numbers
game for
at this
idle
point?
speculation for people that are stuck at home type thing? Right?
Yeah. I mean,
there's a lot to go over from that viewpoint. The first part was sort of like you've got established legacy markets, and that a trade on there is based on a lot of underlying value and generally accepted fundamentals, and it drives an economy that's legitimate.
And
I mean,
also
there's
just to
growth,
jump in,
yeah,
and also just jump in. Sorry, I didn't mean to talk over you, but and also they're highly regulated markets.
right.
On top of that,
So part of the value proposition for Bitcoin, and when I say Bitcoin, I mean all of its possible offshoots of its open source, is that there are no regulations and there are no permissions, or there are very few, and yet it exists and it has persistently growing over time non-zero value. So that indicator just by itself shows, wow, there's value in this economic system that works differently. And if it's mostly speculation right now, and it's becoming less and less so as it grows. I mean, it's relatively young in its progression along the Lindy curve. Are you guys familiar with that whole model?
I'm not.
The
Yeah,
Lindy curve?
why don't you explain it for our listeners?
Yeah, I'll explain it briefly. I learned a lot about it from Bitcoiners kind of in 2017 as the number was going up, so was progression along it. But the fundamental aspect of the Lindy effect means that the longer something is around or lasts or survives, the longer into the future it can be expected to last and survive. And so one of the neat Bitcoiners out there that does a lot of writing, Murad Mahmoudov, put out a really good chart of Bitcoin's adoption, because that's really what the Lindy curve measures, and significant waypoints along it. And we're fairly early along the curve, the adoption curve. And so the Lindy effect means that as soon as Bitcoin hits another milestone on that curve, we can say that it's definitively been better adopted, and the chances of it progressing even further along that curve, as opposed to falling off and going to zero or becoming relegated to a hobby or a secondary money or just another stateless symbol in the list of Forex tickers or whatever, is that Lindy effect of it continuing to grow. And one of the early points on the Lindy curve is it can be used as an instrument of speculation. And so one of my theories, and I mean only time's going to really say if I'm right or not, is that because all of these altcoins that don't really have an apparent use or visible use case, they're riding Bitcoin's coattails along the Lindy progression. And even though they're mostly stuck on the point of speculation right now, with Bitcoin leading the way, it is more likely than not that some, and I'm not saying all, some as in a non-zero number of altcoins, will progress further up that Lindy curve by the grace of Bitcoin's progression along that own curve in front of it, and become going concerns or actually used, whatever you take that to mean. And that's basically the justification for them being only speculative instruments right now, is that if you look into the future along that curve, you get a notion of where it could go from here. And the counter argument is, well, altcoins get traded until they get dumped into the ground and they go to zero and they die. And that's absolutely correct. Not only is it correct, but it is the overwhelming main case. And that's what you would expect from something that is as easy to create and clone and copy as either creating a token on Ethereum or forking the Bitcoin code base and changing a few things, or even not, and creating a new altcoin to mine. Be that as it may, we've had actual developments out of there that kind of get proto used. We have the check lock time verify opcode that was created for Viacoin, and it was incorporated into Bitcoin. Actually, it was one instance where Bitcoin did take something from an altcoin and use it on its own. And that opcode allows for atomic swaps between any Bitcoin like chain. So if any altcoin does end up doing anything cool, it can be used by a Bitcoin user, and any kind of atomic swap based interface like that. There have been a few other innovations like Ethereum taking Bitcoin's version of a blockchain and changing a whole lot. There have been, masternodes has been an kind of an overhyped term that was dumped into the ground because they were so easy to clone. But the idea of an elevated collateralized against bad action node in a network, or kind of like different tiers of nodes providing extra services and receiving rewards, being allowed to sort of hold to unlock the privilege of providing extra services for extra rewards, can enable the earliest stages of governance, and it can enable the earliest stages of kind of gatekeeping transactions. So adding, zero confirmation transactions or instant transactions that are validated by the quorum of masternodes or elevated nodes. And if there is even a greater number of masternodes that are acting badly to validate a transaction that shouldn't be validated, the rest of the network that's not in consensus with it pushes it out to the regular number of confirmations. And the worst case that happens is the transaction just gets validated normally, as if there was no reason for the node's existence. So there has been some other things that altcoins have created that are actually getting used. They don't quite have the widespread validation of what Bitcoin or Ethereum does, but they're still happening, and not all of them have died, and many spring up to take their place. Though that engine has probably calmed down to the kind of low, decent quality, high signal, low noise output that it should be for the long term. And I'd be interested to hear what you guys think of that.
Go ahead, Michael.
Well, I just wanted to say really fast, I think that's a great point, but I just want to ask you if Murad's that same guy who today or yesterday tweeted that tonic water can cure COVID-19. So
it's the chloroquine.
So maybe don't take everything he said. Maybe take stuff he says with a grain of salt.
Some people,
it can relieve symptoms, right? I don't know. Is it supposed to? Is that the argument that it cures COVID? Wow,
that's what. Okay. So he did it with another Bitcoin guy, and then Elon Musk tweeted it out. I think it was him. I think it was Murad.
I heard Elon tweeted something about it. Like, I've been trying to keep my ear to the ground with a few people in the medical profession, and of course, the quality of information that you get right now about all that stuff is suspect. But that chloroquine thing, I mean, it's a very cheap and easy to get medication. I think in 1949 everybody was on it.
Totally.
And so, like, if it turns out to work, they just finished one battery of tests that seemed to suggest that it was A-okay. And of course, I haven't done the background checking of where the test was done or anything like that. But I went and bought some. I hope it gets here. If I get sick, I'm going to try it. And
I mean, I think what the FDA noted was it was only like 10 people in the study, and they didn't follow them after like 4 days of being healthy.
Yeah.
So they have no idea if it was actually tonic water.
Quinine or tonic water is supposed to relieve malaria symptoms. But to relate this to crypto, it's kind of like if you are in the crypto world, or if you pay attention to crypto Twitter, I feel like we get better at knowing whether something may be bullshit, or we just kind of get skeptical of everything when somebody starts throwing things out like that. You're like, okay, yeah. We can't. We also know not to trust the mainstream media. We know not to trust a bunch of crypto Twitter posts about COVID-19. And at the same time, Michael and I were talking about this the other day, how I feel like crypto Twitter was kind of onto things a little bit earlier because we knew some crypto traders who were in China experiencing it. We were talking about the crypto BitLord.
Shout out crypto BitLord. He was in China, and I will never forget that tweet. Burned into my brain. Like, boys, I think there's an epidemic going down in China, and they're trying to cover it up. I don't know how much I can tweet about this. And I think that was January 28th. Like,
yeah, it was really early, and that's how I learned about it.
and coming from Crypto Bitlord, who I actually had to mute on Twitter just because I found him a little annoying.
Yep.
But the thing is like when he says something like that, I have no idea whether he's exaggerating or whatever. And it's like, I feel like in crypto, your credibility can change within like seconds. Like you can go from being somebody who's just crying wolf all the time or talking bullshit to actually having news and information that people take seriously. Sometimes it's about a virus, sometimes it's about the price of Bitcoin. But it's just a weird place. We actually did an episode on how some scammers can actually legitimize themselves in crypto magically.
Oh, big time. I've seen a bunch of stuff. I've seen like people that were serial shitcoin developers and funders, and then they'd abandon stuff, kind of become people who I thought were like the devil, and like I'll try to be the good guy to their bad guy when I first joined crypto. Like it's totally turn it around and just become like kind of knowledgeable gurus in the space, and nobody really knows or cares about their past experiments. And I think there was kind of a weird level of, I don't want to say scammer absolution, but there's pre-2017, there was a lot more, people would try a venture and raise money for it and fail and or exit scam and or be incompetent and screw it up that way. And you're never really sure why. But during that time, because
hold on,
so
really quick.
really
quick. Sorry, I just want to interrupt for a second. But when did you get into crypto? Just so we have an idea of when you're talking about.
End of 2013, beginning of 2014.
Okay, there you go. Now back to what you were saying.
So yeah, there was time that it was happening before I was involved too, and it definitely happened a lot more in the year of in 2014, once Dogecoin sort of legitimized a big flood of altcoins that were mostly terrible. I've seen absolution on people that have raised a bunch of money and pissed it all away, and people from around then, they kind of got forgiven, or just the collective memory. Nobody cares about like quote unquote, I'm air quoting here, OGs yelling at each other about who scammed who back then, because it's so old and it didn't matter, and it was at a time when nobody really knew if even Bitcoin was going to be a thing, like for sure. There was a lot more doubt that 2017's bull market did a lot to wash away. When everybody knows and sees that a number can go up that much, they give it a bunch more validity. So I think if you're going to pull a scam now or raise a bunch of money from an ICO and then fail really hard, a matter of days later, there's a lot less forgiveness available to you than there was for kind of the altcoiners of old. I know,
kind of like crypto WWE. So like Hulk Hogan used to be a good guy, and now he's a bad guy, and he can't go back to being a good guy.
But like Hulk Hogan, if he like screwed over thousands of people,
only the weird and wizened know the full backstory of everything. Everybody else is just like looking at the next episode, and
you're like, back in my day, Hulk Hogan used to be a good guy.
So I feel like that on Twitter sometimes. Like,
how do you? So
don't know.
What's your opinion about that? Notsofast. I mean, well, like I remember there are some, and I actually mention a few on the air all the time, but there's a few crypto Twitter traders that were caught trying to manipulate coins. Like there are many that would do that. They would get together, make some big whale account, and then just kind of flood. Or they go to Trade Ogre or something like that and pick one coin at random and then just try to dump on their followers.
Yeah. There's actually one where I was implicated. There was one where I was implicated, and just because they were talking about people who liked it, and of course I was talking about it because I mined it. I was talking my book, and they just plucked my face out of the Discord and said, "Oh, he's behind it." So he's if he's behind it, then he will probably unwittingly support our efforts, or at least talk about the price going up when we're pumping it, type of thing, right?
So how much, like, don't we need to hold these guys accountable, or do we just need to let them have their Twitter accounts back and here you go, try again, or something?
That's a hard question. You're asking me to pass judgment on a space that I like early on I took for granted that, wow, this is the Wild West, like anything goes. These markets aren't regulated because nobody cares about them, and any regulators that do know about them figure, oh, the markets are too small. Anybody that's participating in crypto, I mean, it's got so much systemic risk. Bitcoin's going to get squashed because every kind of like permissionless non-state money has been squashed in the past. Um, just let them have their fun taking their outsized risk. And now,
Well,
after 2017, there is massive regulator attention, and everybody thinks that it's their
mhm.
job to apply the permissions on this network or system of money networks that started out as permissionless opt-in, run a node if you want and buy in if you want to, don't if you don't type thing. So it's interesting that now we're looking at it through the lens of, do we have to morally regulate this stuff? Is it okay if it remains kind of unregulated and Wild West? Should exchanges and endpoints all be regulated and tracked? Like, where do we stop on the slope? Like,
Well, if
should,
you want more liquidity, you're only
Yeah,
going to get
well,
that from new users, and
yeah.
you can only do that if you have some kind of regulation in place that protects these new people coming in, or else no people
yeah,
are going to stay.
Well, we do a lot
that's
of
interesting to
social
me.
regulation,
Yeah,
right?
there's
It's like,
social regulation too, and I think that's the original vector that we saw. You know, scammers would get raked, and they do get raked, and the communal system of running fake traders out on a railroad or whatever is valid. But it's interesting that you say that the only way we can get new people in is if we protect them, because that wasn't always the case. Like, definitely there was no protections available to me, and I knew full well the risks I was taking, because that's just what you had to do, or you would get wrecked. And the now we're thinking like we're putting maybe a value on regulation in that maybe we shouldn't, for the sake of mass adoption, because now what regulation's doing is allowing an authority to dictate the terms on a system that is supposed to not have authority and function only peer to peer. And
No,
where that
I'm
could
sorry.
go.
I'm not saying we definitely need it. I'm
Oh yeah,
saying
yeah,
that
yeah.
if you want more liquidity and you want more users, there's a certain threshold. There's like the first so it's the early adoption model, where you have your early adopters, and then you have the people who follow them, and then you have the mass public, and then you have late adopters. So if you want that mass public, the only way they're going to go in there is if they feel safe putting their money into something. So you're never
Right.
going to achieve that kind
mm,
of global consensus that this is a new currency without that core group of people, and that's the majority of people on the planet. So
Yeah,
if you don't take into
that's a
account their actions, you're
agreed.
just never going to get
That's a
there.
very cogent argument, and I would, I wouldn't, I wouldn't feel very confident in countering it on the current terms, but the sort of all the macros underlying relative safety can change, and definitely with this whole pandemic upheaval that we've got, um, safety is relative, right? So even though when
Absolutely. Yeah.
Bitcoin dumped, everybody was yelling about how it's not a safe haven and it's not uncorrelated and all this stuff. That's one day or one market movement out of a whole bunch. And now we're seeing efforts from, well, especially the US, because it wants to churn out dollars from the money printer and spread them all over the globe in order to deke out the economic fallout from this crisis. There could be a change in the underlying scene where suddenly all that airdropped US dollars causes inflation and difficulty of pricing things properly. And it could, I'm not saying it will, but it could push something with like Bitcoin with its fixed supply as an easier method of inflation tracking, or of tracking the damage that all the money printing is doing. And it might make it so that the average person getting into it sees the tripling of the price of their loaf of bread, and sees the tripling of the price of their bills and the cost of everything going up, and kind of wages still standing behind, in much sharper relief. And they could see like, well, my purchasing power is evaporating. What can I do about it? Where can I put like my savings, or where can I put my rent money that I'm saving towards the end of the month, before, so I know I still have enough when they, remove rent controls on this place or the other, or I get kicked out for whatever reason. Or where I'm going with this is, it could be that regulation's not the only way to make Bitcoin safer. It could also be destabilization of existing currencies. And we're definitely going to get the best test we've ever had in a world where we didn't have Bitcoin before, of whether that value is going to hold true.
Yeah, I mean, I understand you're comparing it to what, like what happened in Venezuela could happen here, but I mean, Venezuela doesn't have a a federal banking system that has a lot of checks and balances. Like Venezuela, the government did that. The government said, so like, when the Fed does this stuff, it's not the government doing it, it's the Fed doing it, which is completely separate than the government. And that's why the government sometimes complains about the Fed's actions. They're like, oh, interest rates are too high or they're too low or blah blah. Like Trump's always bitching about something and he's calling out
Well,
the Fed.
yeah,
But he doesn't have he doesn't have the ability to directly, take
it's still
these
government.
financial. Technically not. It's
technically not. But like, if you're one of the people that's like, well, neither is Trump, because there's the shadow government in play, and it's all like a cronyist cohort of people in charge of the Fed and the shadow power structure and all that stuff. So it's hard. It's hard to say like it works together.
Technically,
right?
I mean, yeah, I'm just saying technically, it's an organization that we've chosen to be in charge of how the money works. That's what I mean by it's still government. Maybe it's not the same government that is the executive branch of, But anyway, go on.
Yeah. So, but I mean, we do have checks and balances in the sense of the money's just not being printed, and I think that's the. I think so. A lot of people are like, "See, what happened in Venezuela is going to happen here," and it's just like, well, they just printed money and put it on the street, and that's different. They just went to their printer and they just printed thousands and thousands and thousands of hundreds of thousands of dollars, actual bills, and just threw them on the street, and that's completely different than what we do in America. And I think that misunderstanding of how our financial system actually works is what a lot of people who I feel like a lot of people that kind of get sucked into the Bitcoin trap think like, oh, well, they're just printing money and it's going to be inflation. And so I'm going to put my money here. And and then it never happens because that's not really what the government's doing. They're not actually just printing money and then giving it to people.
Yeah. I mean, regardless, it could still, we're talking about the hypothetical, like we're going to test the US dollar and see if Bitcoin and crypto is going to live up to that. No, what the Fed is doing now is very different than what the government in Venezuela did. But there's still, we're still looking at an economy that's crashing right now. So it's like, that's what you're saying.
Absolutely.
Not so fast, right?
Absolutely.
You're saying that right now we have a test, and is regulating crypto, is regulating Bitcoin like directly, is that a better solution than, say, looking at what's happening to the economy? We might not even really need to protect new users, or however you put it.
It's more like saying like regulation
we're not protecting
is
the users of USD.
Necessary and good because new users require the protection that it offers. But if the kind of trillion USD that are being injected into or near the heart of the US economy in order to sustain it through this crisis where economic productivity is going down because people are getting sick and not working in order to prevent from more people getting even sicker. Those two things, the shock to the economic system could make a new case for Bitcoin being safe without regulators having to make it safe. Like the shock to the value of a dollar or the potential shock rather, because I'm not I'm not a card carrying economist. I don't know exactly what's going to happen, but the shock to the value of the dollar could make Bitcoin a safer option, as the economics are supposed to predict. And we've had plenty of recessions and economic shocks where the other options of safe havens didn't go ballistic, like gold in 2008 didn't go to $10,000 or anything like that the way it should have. And that's sort of another whole explanation. It's like I have an opinion that the derivative markets and the exchange traded funds and all the synthetic gold out there, because it's fiat backed, it's easy to suppress the true price of it. And I think the same could be happening with Bitcoin, and it's another
and Tether.
And Tether, yeah, true. It's another side argument for altcoins, but Tether dampens that anyway too, because it's so easily exchangeable with anything. That's
crypto. And I mean, I'm not disagreeing with you in any sense. I'm skeptical on both sides. I think that's what JJ and I do is we're skeptical across the board. So like, it could just be that the 2008 collapse created the next financial currency for the next financial global currency, and it didn't really become necessary until 2021. And it was just kind of kismet that that it kind of played out that way, and then Bitcoin becomes the new standard. But it's like you said, everything is there's a lot in the Bitcoin community, and this is mainly what I try to get new people to realize is this is all a hypothesis,
right?
This is just like a scientific experiment, and there is anytime somebody tells you something, they don't know it's true, because there's a lot of shoulds. It's like you said earlier, gold should have gone to 10,000, but it didn't.
Yeah, and I only have a hindsight reason why it didn't, right? Like I only have that hindsight reason. I think it was the ETFs, and I think it was the synthetic markets for it suppressing it, but I don't know for sure. And I think what we don't realize is that economics is the shittiest science out there. Like, it's all absolute explanation,
and it's not even science.
Yeah,
that's
there's
really
no
funny.
Control group.
That's going to be the
not
title.
Actual science if there's no control group.
That's the title of this episode, I think. Economics, the shittiest science with Notsofast. Well, I mean, there's I think as new users of crypto, like and I can tell that you're a bit like this too, Notsofast. Either that or you just get triggered into doing what you do. But we kind of do feel like we need to feel like we need to protect, whether it's the new users coming in or it's just we need to make sure that what we're doing is still, I don't know, that there's still good things about it. And getting back to like scammers, I think when I first started following you in 2017 or 2018, you were going off on about it was a crypto YouTuber, this guy who always seemed really coked out doing technical analysis, and you had a lot of tweets where you were like kind of slamming this guy, and I was thinking, well, here's a guy I want to follow because he's actually was it
Superman?
I'm not going to name any names. In fact, I don't even know if I remember his name, but but it was just it. But I mean, you are a person that I thought, well, if you are calling out other people, either you're also a scammer and this person's taking part of your market, or you actually feel like you have a responsibility to keep this place somewhat legit. And I like that. I think that we all kind of feel that way. We started this podcast in a lot of ways because we didn't want people just blindly going into crypto.
Yeah, that's
we wanted
super
to ask
admirable.
some questions.
Yeah, it has to be accessible. Yeah. And
so, like, is that something that you actively do, or like I said, do you just get triggered into it?
I like some days sometimes I have to leap to my own defense. Like that time when I was implicated in the whole pump and dump thing because my picture, my avatar was in a chat that was exposed or whatever. And sometimes it's obvious, at least to me, that many people are being taken in by a classical grift that just happens to be under crypto, which is the area of expertise that I developed. And the grift has little or nothing to do with crypto and more to do with people not knowing enough about it. And so it's in keeping with the theme of getting involved that I liked when I got involved, which was you got to learn on your own and recognize the risks on your own, or you're going to run afoul of them. And I'm always on the lookout for new edges and new risks. And some of those risks are people making YouTube channels saying they're gurus, taking 2 videos, one of each side of a trade, and only publishing the one that goes the right way for them so that they can publish a big strike rate and then get people to pay monthly subscriptions to their trading group where they give advice and kind of keep them hooked that way. And those are the type of people that I was usually railing against, because it was sort of the prevailing entry of bad actors into the community. And I would rather new people have a better experience and lose money because they took risks that they understood very well, rather than they used a guru as a proxy for taking those risks and then had somebody to blame. And, that somebody could just as easily be me, because nobody really did the research. They just trusted a guru, and if they see me as the same thing, they're just like, oh, he just hasn't scammed anybody yet or gotten caught yet, right? Type thing.
You're still building up your follower account before you try to
I feel like that's one of the things holding us back from having a million followers and making all this money from this, is that we don't encourage that. Like we're constantly saying, we're never giving financial advice, we're never talking about trades, we're never doing like saying you should put your money here, and people are desperately searching for that.
Oh,
and we never do that.
More than anything, like people always like it's silly that I have the engagement that somebody with like 5% of my followers would normally have, because I think what I was doing when all this following happened, and I don't really look at it so much because I never really you can't put a lot of stock in that silly big number, but I was spec mining and posting like ridiculously sized gains as I had been attempting to do. Like Twitter was basically a mining and trading log for me, and a lot of that is emulative, or people like want to do the same thing. And I had a bit of a moral crisis where if I tweeted a cash tag of something, people would FOMO panic buy it, and that level that level of power is just like, what do I do? I mean, I want to keep tweeting my trades to keep myself honest, but I'm literally creating a temptation for myself to tweet something and then dump into the people that panic buy it because they're watching what I do.
Exactly.
I've had people.
How many followers
corrupts
do you have?
absolutely.
Yeah.
Yeah.
So how many followers do you have on Twitter right now?
I have 146,000. Yeah, but like I have the engagement of someone with like 5,000 followers. Like I'm super glad to have fallen out of favor compared to some of the new up and comers out there. I'm so glad to have. So
why do people follow you then? I mean, it sounds like you've got a couple different groups. You've got. I'm gonna guess that there are people who just want whatever. Whatever price calls you're going to make. But the people, those 5,000 that you actually get engagement from, what's happening on Twitter there?
I wish I could tell you. Well,
why do people follow you? What do you notice people engage with most?
Oh boy.
Yeah, I mean, you're asking a tough question, because it's like,
if
people knew the answer to that, everybody would just follow it.
Yeah.
Maybe.
I think so, right? Like the formula. Well, I started out by trying to not, I don't.
It's not a form. I'm not asking you.
Post what I did.
I'm not asking like, what did you do to get a lot of followers? I'm asking like, do you have a relationship with your followers now? Like, what is your Twitter account about? If right now it's not about trade logs and stuff, because I don't see you posting many trades these days.
Oh yeah, I'm afraid to post. I'm afraid to post like mining take profits. I'm afraid to post trades. Also, I have a way to sort of do that privately and kind of out of the eye, where I could get accused of doing it for the express purposes of pumping and dumping, or having people piggyback on it and pumping and dumping, and then they can point a finger at me and all that stuff. So now it's more of trying to engage in constructive conversation surrounding crypto, and if I need to, like, point out scams or point out discussion or try to push like, I don't want to say like my own philosophies, but I definitely want to or hope to shape the thinking around crypto and not get too far dug into uh, philosophies that I don't think are 100% correct. Like you guys said, maintain a skepticism about everything. And I think, there are certain philosophical or economical camps trying to push narratives around Bitcoin that are, they don't want to hold them up to any kind of discussion because they have a vested interest in their number going up for another exponential cycle. And they want to provide all the articles and the economics readings and classes and all that stuff that support this. And I don't want to like call out a philosophy by name, but I guess I kind of have to given that background. So like the whole Bitcoin maximalism thing, like there's a strong argument there, but I've developed like a counter argument to it that at the beginning I called my argument the weak argument, like sort of the gravity weak and strong force. Now I think it's almost on equal footing, and that Bitcoin maximalism denies Bitcoin's open source software fundamental nature. And if it doesn't account for the infinite clonability of itself, it misses out on a whole bunch of other aspects of it. So I try to sort of temper anything that people think is too true or any narrative that's being pushed and not allowing for itself to be questioned, and more I don't want to say abusing or exploiting, but employing the attention that I'm fortunate enough to have to lend weight to my own skepticism of these narratives. So I would hope that you guys would see a little bit of yourselves in what I'm doing in that way.
Nice.
Yeah, I mean, I think we agree very much with you about that weak argument, and it's something that we've kind of been hung up on for a while.
It's kind of what got us started.
And at the same time,
yeah,
it's part of what got us started, but it's also, I mean, that's got to be really hard for somebody who has a lot of influence to I mean, well, you need the maximalists because they're going to be the ones who are going to be looking out for the shitcoin scams the hardest or whatever. And I think it is easier to do that, but you are denying the exploration of this new technology.
Right. And then again, like people explore on their own terms, but we're talking about regulation putting up safety rails for them. And if you're padded and strapped into the ride and it's all done for you, are you really exploring at the end of it and everything? So it's cool because we're still looking for the balance between the Wild West was super exciting for me. I loved it, but people got shot in the Wild West. Like they did not live. Not many of them lived prosperous lives. They went panning for gold and got killed. Like there's a lot of risk involved in exploration, and if you put too much padding on it, then it's not really exploration anymore.
I mean, but at a certain point, you have to realize we've gone past the exploration phase, and
the majority I hate to realize that because it makes me sad because that's what I loved about it so much. But you're right,
because the majority of people out there don't have the money to lose in a scam or in a front run or in a high frequency trade scam, or they just don't have the money to lose, and so we have to get to a point where we can safely say, hey, if you put $1,000 into Bitcoin, you're not going to lose it all in 3 minutes. and until we can do that, we can't really expect the masses to actually accept this as something that's safe. And that's all I meant about regulation.
Yeah. No, I can definitely agree with that. I can definitely agree with that. And you know what? It takes a lot to develop your own system of protection free from the existing regulatory systems that obviously want a piece of it because they also want some upside. So it may be the case that because Bitcoin's way more resistant to change than sort of legal regulations, it may be the case that like legacy regulation systems back off from Bitcoin once it's able to regulate itself. And I think that's what I've seen as the kind of main fundamental philosophy behind a lot of the regulators, at least who I see speaking on Twitter that I respect the most, is they say, like, once this system can take care of itself and there's more upside for people in general than downside, like, there's nothing for us to do.
Yeah, but that's what Republicans in Congress say is like less regulation, and what we see is water pollution and air pollution and nobody really taking responsibility for themselves, and kind of
Yeah, there's
like you
always a
said,
dance. It's
absolute
never
power.
over. The dance is never over.
Yeah,
I
I
get
mean,
it.
absolute power corrupts absolutely. So you're going to get people who come into this space and kind of take over, and all of a sudden they're just corrupting everything because there's no regulation. So I feel like there always needs to be some kind of, I don't want to say big brother, but in the sense of like right now, the Bitcoin core team, they're big brother. They have the final say in everything, right? It's just like people say, well, any coder can come in and put new, can write code for it. You're like, yeah, but you have to get it accepted, and it's
Oh yeah,
usually not accepted unless it's by the people who are making all the final decisions. So there is
yep.
a big brother in Bitcoin.
In many ways, yes, there is. In many ways, yes, there is. And it could be the case that um, once it's more worthwhile to work on systems built on top of Bitcoin than it is to work on changes and updates to the protocol itself. Like, once it works well enough that we can leave it alone for a really long time, that you've heard talk of ossification of the protocol, right? And that's ideally what
Yeah.
we all want to happen to Bitcoin. It's just it
What
doesn't.
does that mean? What does ossification of the protocol mean?
It means that the Bitcoin protocol needs no more updates. It can run as
Right.
it is
Okay.
until the block rewards mined out, and anything further that needs to be changed with it can be built in second layers on top of it.
And
And
so
that's good because it
nobody's
takes away.
so kind of like TCIP, like it's just running in the background smoothly. Nobody's really aware of it, and people are building on top of it.
Yep.
It's not there yet.
Yeah,
And
it's not there yet.
are there people who believe that it is? Or,
I mean, because right now
if it had
nothing's
to
being
be,
built
it
on
could
it.
probably
So.
go. If Bitcoin had to be like left alone forever and nobody could push any more updates to it, not even like the core developers, I think it might be okay. Quantum stuff notwithstanding, that's a whole other can of worms that I've tried to learn about and not gone too far on. But it would probably be okay, despite that one thing. And that's pretty far along the curve towards ossification of the protocol. Like, once the protocol is set and there's nothing for core devs to do, there's no more core dev control. And it becomes increasingly difficult to try and nominate more or push more code that gets generally accepted and gets pushed out to miners to all, or node runners to all get consensus. So so we're close, and we might be close enough for that.
Well, man, this has been such an interesting conversation. I feel like we
Yeah.
could talk for another 2 hours, but we got to start wrapping it up. Well, thanks. Well, I guess my question now, last question,
Sure.
is what do you have going on now? What's interesting to you about crypto or beyond? What's your new thing? Do you have any sort of mission that you have anything that you're after?
Yeah, the mission right now is one of observation. I mean, we're undergoing a unique crisis, and I want to see how the markets react, given that they were designed, at least in the spirit of providing insulation and safety from crises. So I'm going to be learning as much as I can about the crisis and about the economic reactions to it from the legacy financial world, and then very closely tracking how Bitcoin and other crypto moves with it in order to see if the fundamental value prop of Bitcoin itself gets to bear out this time.
Oh, all right. Yeah. I guess we're all kind of watching that.
We're all
Everybody
doing
in
what
crypto
we're all doing that. We're all doing that.
It's interesting. We're kind of, I mean, I think many people are watching that more than the price because we want to see what ends up happening. Like, what is this going to be useful to people, especially in an economic downturn?
Yeah, I mean, we are in a really interesting point in time for cryptocurrency because we're watching an experiment happen in real time, and we get to actually like we're the scientists taking notes on watching it,
or we're the guinea
in
pigs
front of
being
us.
experimented
Scientists, guinea pigs, depending on how much skin we have in the game, for sure. But
we're participants
that also keeps
and the scientists.
Yeah, it's fun to be both.
All right. So, is there anything that you'd like to share? Notsofast on Twitter. Do you have anything else going on that people can follow or check out?
That's mainly it. Twitter is where I'm keeping it active right now. I'm just trying to be loud and involved, but anybody can reach out to me anytime, and I'm always happy to answer questions or point you in the direction of resources. That's been my MO from the beginning, and I never wanted to stop.
Nice.
Cool. All right. Well, thanks Notsofast so much. And Michael, unless you have any other questions, I'm going to probably end the podcast.
No, that's it. Thanks so much for coming on. I appreciate it.
All right. Bye, everybody.
Thanks very much.